and good evening. I'm Melisa Idris. Welcome to Consider This. This is the show where we want you to consider and then reconsider what you know of the news of the day. EPF will launch a new flexible account on May 11th to give members access to a portion of their retirement savings. Now, all contributions moving forward will be split into 3 accounts. 75% of contributions will go into account 1, which will now be known as account persaraan. 15% into account 2, which will now be known as account sejahtera, and 10% into the new flexible account flexible. But the move has drawn mixed responses from the public and from experts. So tonight on the show, let's deliberate all sides. Joining me tonight is Balqais Yusoff. She's the head of the Policy and Strategy Department at EPF. She leads the team that designed the restructuring for the accumulation phase. I also have Dr Amjad Rabi, who's a social security economist who is currently a visiting expert at Universiti Malaya's Social Wellbeing Research Centre. Welcome both of you to the show. Thank you for joining me and helping shed some light to this new initiative. Balqais, help me understand, if I may begin with you, help me understand the thinking or the rationale behind the restructuring of EPF accounts.
Thank you, Melisa and Dr. Amjad. Basically, the EPF, we always have at the heart of our planning or design members' well-being and their retirement years, because basically Malaysia is one of the countries that have a good system, which is the EPF, the defined contribution scheme, and at the system level, we are very, very sustainable. However, at the individual level, we are faced with inadequacy as well as our lump sum, payouts. It's not helping. So the EPF now, we embarked on this journey to transform and help our members have a better retirement well-being and retire with a lot better in terms of financial abilities to finance their retirement years. So the first part of our transformation will be to look at account restructuring at accumulation phase. Right now, how we design our scheme is kind of confusing. You have account 55, account 1 dan account 2 below the age of 55, and then you have account emas, which is locked until you work at 60, and then after that you have account emas unlocked. It's all very confusing. So EPF will be designing our policies in 2 phases. Accumulation phase and then decumulation phase. Now, what does that mean? Accumulation phase means you're very, very productive in the labor force, so you accumulate. You have money, you have income, ada kerja, ada gaji, so you accumulate. After you retire or semi-retired, you start to decumulate, right? So we are now going to design our policies around these 2 life stages. So number 1, for account restructuring that we are doing right now is for people below the age of 55. Okay. People today, we have account 1 then account 2, but they don't understand what account 1 stands for and account 2. Technically for us, account 1 is meant for retirement and account 2 for your life cycle needs. But because of the naming, people are not able to associate, with the meaning. So therefore, in this restructuring exercise, we are going to split the accounts, as you mentioned, from 2 accounts into 3 accounts. So therefore, 70% and 30% will be split into 75% for your retirement. So technically, we're already increasing your retirement needs. Yeah, but the other balance, 25%, we're going to carve out into 2 accounts. One is account sejahtera and the other one is account flexible. So why are we doing this? Is because we understand from behavioral science, when people cannot address their immediate needs, they will never think about their retirement. So first, we need to make them comfortable that I am going to be able to live tomorrow and today. Then, when they are comfortable, they will start planning. So the accounts are structured in a way designed for financial literacy, short-term needs, medium-term needs, and long-term needs. Retirement is long-term. You cannot think about your retirement today because it's like very further out. Yeah, so that's why it's long-term and account persaraan. So account sejahtera is for your well-being, because whatever you do today, education helps you with your income. Because if I'm more educated, I'll get better income. So someone who's educated will get technically over their life cycle 4 to 10 times more than an uneducated person. Someone who's educated also have contributory capacity, and they live longer in terms of life expectancy based on research. Someone who's educated tend to live between 5 to 17 years longer than a non-educated. So that's why we feel education, having shelter over your head, insurance and healthcare needs, these are your life cycle needs. All of this, if I'm healthy, I can work. If I'm not healthy, I cannot work. So that's why life cycle needs are things that help you get a better retirement future. At the same time, we understand the short-term needs. So we're helping people to say that in case of emergency, you can access this flexible account, right? So short-term, medium-term, long-term. So in terms of the person's financial planning, they can start thinking about it that way as well. So short-term, medium-term, and longer-term needs. So therefore, they can start planning their life a bit better.
Okay.
Yeah.
Right.
So
I'm gonna ask Amjad. Amjad, what did your kind of initial reactions when you think about the restructuring of EPF? Does it make sense from a social security perspective?
It's a good question because I've seen some reactions supporting and against, and I tried really to be as evidence-based as possible, being in the academia. So looking at it, we need to contextualize it, put it in the context of during the pandemic, the government of the time allowed people to withdraw some of the saving from retirement, and that was large amount of money. So this created a challenge for EPF to deliver in their mandate. Their mandate is long-term, as Pan Balqais highlighted, or retirement needs. But now the fact that the government allowed for people to withdraw, it created the perception that you can withdraw. Now EPF, the way I see it is pragmatic. It's pragmatic approach. This is the challenge they faced, how we can maximize on delivering on our mandate. So I think they came up with a pragmatic approach that, okay, we hear the rakiyat, we hear the concerns, we allow you to have 10% flexibility for your short-term emergencies. At the same time, using that as creating incentive structure for people to put more money, which matters for their well-being in the future. So I think it's kind of, turning a challenge into an opportunity for EPF to deliver on their mandate. So it's an incentive structure to increase the retirement by 5%, while at the same time responding to the new reality presented during the time that people were allowed to withdraw.
Okay, all right. So, Balqais, I have to ask, how do you react to the criticism? So what Amjad alluded to, the reactions that have not been so positive, the reactions who say that this is not part of EPF's mandate. EPF's mandate is as a provident fund, as a retirement fund, is to think about retirement savings sufficiency, not to give people immediate access to what was supposed to be for the future. And this could jeopardize collectively all collectively for all EPF members, there could be repercussions. Can we talk a little bit about how EPF is responding to those criticisms?
I think we live today in a very polarized world. Mm-hmm. People have very, very diverse views. So there are people who like the scheme, there are people who don't like it, and then there are people who want more access, right? So for us, we believe that we are safeguarding your retirement security because we have now increased 70% to 75%. When we look at savings adequacy, we have never looked at account 2 because account 2 is meant for your pre-retirement needs, and by age 50, most people would have withdrawn, so it can never add value to them. Mm-hmm. So now by taking 5%, we are addressing the group that felt that EPF's mandate is about retirement needs, and we are increasing that. But at the same time, we are addressing the informal sector. Also, they believe that if you lock all my money, I don't want to be with you. So now we are also addressing the needs of the informal workers who feel that if I have a bit of liquidity, you may be an attractive solution for me because I understand that I need to put my money for my retirement, but I also have certain needs. But I want to say this, that these are new developments within the policy space. So for instance, the UK Nest, where they have this also saving scheme for the private sector employees and people, they are experimenting with this thing called the sidecar account. Giving people some access and flexibility will make the scheme more attractive to many people. So for us, we are seeing this as new designs that is more future fit for the future, because when people feel that there is some empowerment, they feel more excited to even partner with us for their retirement well-being.
Right, that's really interesting, because I was about to ask you if other countries have any similar type of kind of flexible account programs within their retirement saving schemes.
I think, in the space of policy design, many countries are experimenting and trying to do things differently in more innovative ways. So for instance, the Nest scheme in UK, they are also experimenting this thing they call the sidecar account. So they're allowing people to put in this new account any amount that they want, and they want to see the behaviors, whether people are more inclined to put money in if some flexibility to withdraw is allowed. So EPF has gone in and do this, and by allocating 10% into this flexibility in order to attract more money, because later on we allow people to transfer between the accounts to improve their retirement well-being. So for instance, for us, we don't see this as a reduction. We see this as a progressive move, because before this, retirement savings is only 70%, because people will exhaust their money in the 30%. So now we are taking 5% into retirement, and we are helping people accelerate their retirement savings and build up post-pandemic, because we had 145 billion being withdrawn.
Right.
So by doing this, today we have active members, 33% are poised to meet retirement savings targets. But by doing this in the space of 10 years, we will get double that amount. 65% of our members will achieve that basic saving. So for us, we've done the calculation. We know that this is a positive move. So we hope to address the ones who have concerns about this is not EPF mandate. It is EPF's mandate to help retirement be, and we're doing that. At the same time, when you look at behavioral science, again, like I mentioned to you, people hate losing more than they like winning. Based on behavioral science, it says that if you lost 100 ringgit, for you to become happy, you have to win 200 ringgit. But if you win 100 ringgit, but you lost 100, you're not happy. You're not even neutralized. For your feeling to be equal, you need to win twice as much. So because of this, the design is that give you 10%, but we take 5% into retirement well-being to balance the negative feeling that individuals may
Do you
have.
think that's enough, Amjad, to silence the critics who argue that this is really not EPF's mandate, that we will see the repercussions of this restructuring down the line, and it's the EPF members and its society who will have to pay the price for the people who don't have enough retirement savings?
I think I see the point, but I disagree. And the reason why I disagree, always when we evaluate an action of an organization, we hold it against its mandate. As Puan Balqais mentioned, that they will increase saving for retirement, which is the mandate of EPF, from 70 to 75%. So from organizational point of view, they are delivering more in their mandate. So that's one. Then the second point, usually when you evaluate public policy in general, not only the organization, but the broader impact of the step. And the broader impact is very marginal. This is 10%. If we look at EPF salary scale, my understanding is 78% of EPF member gain less than 5,000 ringgit. 78%.
78% of active EPF members
working
working earn
less than
5,000 ringgit a month. So the 10%, it's like 500 ringgit. It's about 40 ringgit. It's 500 ringgit. So it's not like going to change dramatically the situation. They already, my understanding also, the withdrawal is already more than 10% in EPF from account 2. So it's technically it's not that significant in terms of the society. But I wanted to take it further. We need to remember that EPF members are 8.5 million. Let's add to EPF members, even the civil service members that they have pension is another 1.5 million. So we're talking about 10 million. But the labor force in Malaysia, 17 million. Right? So we already lost 7 million. Let's add also, it's the labor force, not everyone in the labor force. The ones in the working age, from age 15 to 64, the working age population in Malaysia about 24 million. So out of a potential of 24 million, EPF covers only 8.5 million. So it's about 1/3 of, so this even, it will not impact the totality of the society. It's only 1/3. And the 1/3, it's so little. But to summarize, I mean, the issues in Malaysia, if you would look system view, is beyond EPF. System view, we have coverage issue. The coverage, as I mentioned, 1/3 out of the 24 million only contribute. So coverage issue is a major one. Then adequacy issues. Now, people, even the ones in EPF, they reach the age of withdrawal at age 55. They have less than 50,000, half of the population less than 50,000. So already the adequacy issue, it has nothing to do with account 1 or account 2 or flexible account. It has to do with the low wage basis. And this is beyond EPF, to be fair to them. So it's again, we need system review to address the issue of coverage and the issue of adequacy. Has to be at higher level at government interventions. And I would like to add another objective in addition to coverage and adequacy is long-term sustainability. So we can enrich our generation at the expense of the future generation. So we've got to do it in an intergenerational, equitable way, making sure that whatever proposal at higher level to be sustainable.
Sorry, could you just elaborate on the generational, so enriching this generation for future generations to be enriched as well?
Right. I mean, one policy, we've seen some countries that they start with very generous radical change, right? To say, okay, we'll give like, social pension very high. Or you can do that, but where are you going to get the money from, right? That's another question. So we actually, I'm sharing this because we put forward multiple proposals from Social Wellbeing Research Center and also with support of EPF, putting forward multiple proposals on how addressing the system issues. So how we can address coverage issue, how we can address adequacy, at the same time in a very prudent, financially prudent way, equitable, not to make sure to get into debt, but rather to do it within the fiscal envelope of Malaysia.
Okay. I just realized that we actually never got into how this new restructuring is going to work. So maybe, Balqais, you can talk a little bit about just the operations of it, the logistics of it. How does it work for those who are interested?
Okay, yeah. So first thing, step 1, on 11th of May, your 2 accounts, for if you're below age 55, will split into 3. And then any new money will go into the split that we mentioned, 75, 15, 10, right? But then your account flexible will start at 0. But the other 2 accounts, account flexible and account sejahtera and account persaraan, is just going to be renamed. So no money transferred anywhere. So it's just like account 1 now renamed account persaraan. Account sejahtera is coming from account 2, so there's no transfer. But your account flexible will start with 0. Now you have an option to have an initial amount, or you don't want an initial amount, right?
So that's the only option, right?
Yes,
the
only option.
opt-in option is whether or not you start at 0 or you have a balance there. Okay.
Yeah. So let's say I don't want any starting balance. So only new money will split 75, 15, 10, and I will start having my account flexible being built. But I also have a choice if I want some money, all money that was in EPF account 2 before, to be transferred into my flexible account. So there is an option that we're giving people until 31st August.
Is it only that window?
That window for initial
for that starting balance?
For that starting balance. Otherwise, you start at 0, but your account flexible will always be there in perpetuity. So new money you'll start to build up. But if you want, quite a big sum in your flexible account, you have a choice until 31st August to do so. So how this works is that you have to make a choice in our system, or you can go to the branch. So when you say, I want money to be loaded into my account flexible, and I don't want 0 balance. So when you choose that, it doesn't mean that you get automatic withdrawals, right? So when you choose that, now account 2 will be split with this formula. 10 out of 30%, assuming account 2 has 30%, 10 of 30 or 1/3 will go into your flexible account, and then 5 of 30 will go into your account persaraan. Right. So the remaining half will stay in your account sejahtera. So we are saying that if you don't want your split retains, your old money is 70-30. But if you want to make a choice, now the trade-off happens. You take 10 out of 30, but you have also to give 5 out of 30 into account 1. So that's how we build and accelerate your savings, even old money. So not just new money. So that's a trade-off decision that you have to make. Okay, now, the money is there. You can do this anytime between May 11th to 31st August. The longer you delay, the more build up you get in account sejahtera. So that money that is in account sejahtera, if you do in 31st August, you will have more than amount that you have when you do it in May, because new money keeps coming in, and then you have a portion of the new money build up into your sejahtera to be transferred. So that's how it works. But so that's how it works. So but then but the withdrawal doesn't need to happen. So withdrawal can happen anytime. So even if after 31st August I just withdraw, money stays there, but I don't need to make any withdrawal, because I just want to say, okay, in case of emergency, I have some liquid funds. But you don't need to make that withdrawal. So we encourage you not to withdraw, because the withdrawal can happen anytime. After that.
Okay, so you don't have to make the withdrawal if you don't want to.
Yeah.
But do you anticipate people wanting to? Because during COVID, during the pandemic, 145 billion ringgit was withdrawn out of EPF's coffers. Do you anticipate a similar amount, maybe not a significant amount, being withdrawn out of EPF because of this introduction of flexible account?
Yes, we do. But if we assume everybody make that withdrawal, and transfer, we are looking at 50 to 56 billion outflow. But based on our historical records and patterns of withdrawal, because during the pandemic, a total of 8.1 million people make at least one or more withdrawals, right? So when we look at this profile, we are anticipating somewhere between 25 to 32 billion leaving our system only during that period until August. But after that, year on year, we are looking at 5 to 6 billion outflow only, because it would have normalized.
How might that impact dividend and also EPF's investments?
It doesn't impact us, because we already make provisions all the time for account 2 to be withdrawn somewhat, because of the way that we are structured. And secondly, people above the age of 55, they already can have access to the funds. So we have about 300 billion money on demand. So we have a strategic asset allocation that is resilient and robust, and we can manage this. This is not a big outflow that will impact us in any way. In fact, it's going to help us better plan, because we know now more money is locked up in account persaraan.
So all the EPF members out there who are wringing their hands worried that this might impact their dividend in future years, what do you say to them?
Inshallah, EPF is here to protect as well as enhance the value of your capital. So far, we have a good track record. Our average 10 years performance has been in the region of 6% the last 10 years. So we have delivered, but our strategy is about optimizing your returns, and then we want it to be consistent and not to be too volatile in terms of our strategy. So therefore, we have a very solid strategic asset allocation, in terms of portfolio management, that will continue to give you the good returns that people have been enjoying.
Right. Amjad, I want to talk to you about people's approach to retirement savings and retirement savings planning. This account flexible, EPF's rationale or raison d'etre for it is for emergencies. But do you expect that people will save it for emergencies, or just withdraw whatever they have and, who cares what happens in the future? We'll worry about that later.
I think it's common everywhere that shortism is the enemy of pension plans everywhere. And this has talking about psychology and human behavior. It goes back how we evolved over time, like over millions of years until probably 1950s. Life expectancy was around, even in Malaysia, life expectancy was 55 at time of before 1950. So historically, people live up to this age. And why is that important for our behavior is that people always underestimate life expectancy. They underestimate longevity risk. And that's their action always is that today is better. I don't know if I will live. Well, they will live because life expectancy here is quite reasonable, 20 years if they reach age of withdrawal at 55, 20 years. So we expect, I think, fair to say that many people withdraw, as Juan Balqais said. But wanted to come back to actually a mistake I made when I was calculating on spot in the hot seat. I was saying 78% of Malaysians in EPF earn less than 5,000. I multiply 10%, but we need like of the contribution. So if we apply the contribution rate of below 5,000, it will be, the 10% will be 120 ringgit for the majority. So it's actually very little. Even if they withdraw all of it, after the first year, as Juan Balqais, it would be about 5 billion ringgit, the impact of that. When EPF, what comes in about 100 billion ringgit. So it's not every year. It's not going to be significant. But we should expect for a while people to withdraw. And that's why very important to complement this with lots of learning and education. And this is not, we shouldn't expect to see the results tomorrow, but this is a long-term process of financial education over the long time to counter the psychological impact of underestimating longevity of population.
Balqais, can I get you to give them a 1-minute education of this? What would you like those people to know if they're making that consideration? What to do with account flexible? 1 minute, the camera.
Okay, I think account flexible should be used properly for its intention, which is for emergency. If you don't have to withdraw, please do not withdraw. And because everything will add up to your retirement years, you know, but whatever it is, we are as EPF safeguarding your retirement, and we want you to think about, you know, for the skeptics out there, from 70% to 75, because that's your retirement, and how we calculate your retirement adequacy is just from account persaraan and not from the other two accounts.
Thank you both for shedding some light on this matter. I appreciate your time and your insights. Thank you. That's all we have for you on this episode of Consider This. I'm Melisa Idris, signing off for the evening. Thank you so much for watching. Good night.